favorite rock. Rocco, 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 our favorite rock. Rocco, 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 our favorite rock.
Let's go. Hold on. Okay. Do a quick video. I know everyone's getting ready for football, so I'm gonna try and make this fast. I didn't do a normal video this week. I guess I was just trying to take in all the craziness of Trump coming in. I don't think doing videos on all his executive orders provides much value. Kind of just taking in the bigger picture. So I did find it funny that I missed it. Where'd it go? I lost it. 1 second. The bromance, it looks like, between Elon and what's his face might be over. Trump. Okay, that was fun. Okay, here we go. Maybe this should have just been a video, but it's easier to do lives because it's all just embedded. So we are going to do, I talked about this with a few people, I think. My attempt is to run I'm going to run a paper account wheel strategy in 2025. So I've read up on wheel strategy. I'm sure you've seen channels do it. The funny thing is, like, the channels online do it very aggressively. They're doing like a wheel strategy on like individual, like very high beta stocks because they generate more premium. So I'm like, well, okay, what if I haven't seen any channel like, let's pretend magically I am retired and I just want income from a wheel strategy. So it's just a way to generate premium that you can live off of. So we're going to see how realistic is this. If I run this whole year, so not a ETF, we're not doing one of those. This, like, you, the person, what can the results be? So this is in simplest forms, this is the easiest diagram I saw. So basically you're selling puts on, now I was going to do SPY, but Jesse made a good point. Might as well try and go for QQQ because I'll get probably better premium generation for, I don't think, much of a difference in risk. So I am like, okay, I'll either run this on QQQ or SPY. We're not doing individual stocks. Okay, we're just going to do an index. Technically, I could do the Dow Jones too, but no. But so you'll sell puts to generate premium. Okay, and I'll do it until you get assigned. If you like, so I did one already. I did not get assigned. So I will then, we're not progressing to the next level because I will just have to do another put. If I do a put and the market drops, I get assigned the 100 shares per contract, then you go to the next level of the wheel. I mean, I think 99% of you know what this is. Now you have, you were forced to buy whatever index or whatever you had the contracts on. So now you have these assets. So now you start selling calls because now you're trying to get rid of these shares. So then you start selling calls, and if you don't get assigned, you do another call. And then at some point, hopefully at that point, I get assigned, the shares go bye-bye, I get my cash, and then I can progress to restart back to selling puts. There you go. There's your middle school level discussion of this. So here's another diagram. There's lots of diagrams of this. There's lots of, and I'm not so rigid in how I'm going to do this. The whole point of doing this is, right, I'm not rigid. I'm a person. So I'm going to try and navigate the markets and try and implement a wheel strategy the whole year. So maybe I'll switch between SPY and QQQ, depending on the market, because the idea of this is I'm using my judgment. This is not a robotic methodology. I'm supposed to have some sort of decision making. Can I make this work? Is it worth my time? And that's the thing, because I'm kind of curious, is it even worth doing this to generate premium when I'm retired, which, who knows, could be in 10 years from now. So there's people like this, the naysayers. This guy did a whole article about why the wheel strategy doesn't work. I think people come at this from different ways. Like, if you're doing wheel strategy just as an investment tool to generate, like alpha in the market, okay, that's a different train of thought. I'm doing this as a thought experiment of, is this worthwhile to do when you're retired and you're collecting income to live on? Okay, so I suppose if I wanted to do this as a generating alpha strategy, then I would do what a lot of the channels you see online, like TJ the Wheel, is doing individual stocks. So you're adding this other layer, right? You're not just trying to live off it. Now you're trying to make more money than the market, let's say. And that's why they get into like high beta stocks. And if you remember, there was a specific person who tried to tell us that this was an amazing way to beat the markets. I've seen many people trying to say that this option selling is amazing, some sort of amazing tool. This guy's gone. If you don't, Mr. Portman. And I hope he took my advice, because I really messaged him many times. I messaged him numerous times, and I'm like, you're selling puts on very high beta stocks because they generate a lot of income, but they're also, he didn't understand the risks of what that high premium represented, and he got wrecked numerous times. And I think he might have actually taken, I kept telling him, just buy the index, buddy. What you're doing is pointless for generating alpha of the market. I think this is nonsense, but I'm approaching this as, I'm a retired guy. I'm just trying to get some income to live off of, and it's something to do during the day. Maybe you're just kind of bored. It's just something fun you could do. So here we go. There's plenty of articles. Okay, so here is, I don't know if you knew this, but Thinkorswim does a paper account, so that's kind of cool. So I already ran this. It's gone because it didn't get exercised. So this was the first one. I did it, I think, 2 weeks ago. I don't know if I'm going to do bi-weekly or monthly. I'm kind of up in the air. It'll either probably be bi-weekly or monthly contracts. So we'll see what I feel like. But again, I'm like supposed to use my judgment to see if this actually is even a worthwhile endeavor when you're retired. So now theoretically, I have 200,000 paper money in this account. So obviously, when you're selling puts, you need to have enough cash, right? To, if you get assigned, to actually buy the assets, right? We're not assuming any sort of naked. So with this strategy, I'm not taking on contracts that I don't have the assets to cover. So we're not doing any sort of naked contract writing. I'm not doing any sort of theoretical margin. If you're doing margin trading in retirement, what the hell's wrong with you? So 200,000, I did SPY. I did 2-week puts, and I went, now the first idea I had was to go like, do I go like 5 or 10% price wise under the current price of the market? Right. Because we're not trying to get assigned because we're retired. So I don't want to get assigned. That's the goal of this. So I went like 10%, I think, under SPY when I wrote these, which obviously you think, oh, well, that's smart because it's free money, right? There's no way the market's going to drop 10%. Okay. Well, the market's not rewarding you for that. You only got, I think the contracts were $228 for 2. So theoretically, that's all I could get for 200,000 covered. So $228 for a 2-week, out 10% out of the money put. Doesn't seem very worthwhile, does it? It seems like kind of a waste of time. So I'm tweaking it now. So we're gonna follow more of a strategy where I'm following delta. So I'm gonna write these puts and the calls based on the delta of the index. There was numerous places like, what delta should you aim for, right? And I saw from 0.1 to 0.3 to 0.5. I saw quite a bit of variety and opinions on what sort of delta. I'm kind of fluid about it at this point. I was going to try and make a joke who actually created it. So there's Reddit articles. I mean, this has been talked to death. I'll probably link this one. Very elaborate. So this guy is doing stocks, individual, not indexes. That's why it's a little different. I'm not going to, doing this on individual stocks, like that's adding a whole level of complexity. If this is a thought experiment as a retired person, I don't know why you would not do this with individual stocks. So he goes through the steps. Now we're going to compare this. If I can talk about other stuff at the end, but I don't want to make this too long because football starts at 3. So So we're going to compare this. These are what I'm going to compare it to. So I'm going to note these down on a spreadsheet. I'm going to create follow this, and I'll probably do updates maybe like quarterly on how this strategy is working. Now I should say the other idea. Now I have to maintain the $200,000, right? So I'm deriving income, but then I still don't want to lose. I don't want to lose value of the account. So if I get exercise and I lose, and the account goes under 200,000, I have to replenish the account to get my balance back up before I can start pulling premiums to actually like live on with this experiment. So we'll see how far that goes. And we'll see what kind of yield I get. Mind you, it's all going to be now the tax repercussions will be theoretically if I'm on like a Social Security income. What kind of tax repercussions is this? And I'm going to compare it against like these ETFs. So we have DLN, which is my homeboy, which is just like literally the 350 biggest dividend paying companies in America, right? So very tax advantageous. I'm going to compare it to GPIQ, which is Goldman Sachs has a option overlay strategy for income on. They have one for S&P 500 and for QQQ, where it's the basket, right, of stocks in those indexes, and then they do options. And this is actively managed, so they're making decisions on what contracts. So this is kind of similar to me, JPIQ. What I'm doing is kind of similar to what they're doing, and their goal is capital preservation also. So that's going to be actually the most applicable comparison to what I'm going to be doing. Can I do better than this strategy, or should I just buy this and accept a expense ratio? JEPQ compared to that too, it's very similar in theory. It's just it's not contracts, it's equity linked notes, so it's like got debt instruments. I'll probably compare it to this too. Same thing, actively managed option overlay strategy. This one's on the S&P 500. I put it in there because it's actually I think it's got 2.5 billion assets under management, so it's actually becoming a pretty popular ETF. And then this one, I'll compare it to this. This is like robotic. XYLD, which is like the oldest one in this of these types of ETFs. This thing is robotic. It buys a specific, I think it's at the money, or it buys a specific contract every month blindly. It's just automated. There's no person. So it's just a robotic algorithm strategy where it's just buying or selling whatever options at a specific price, time of the month, boom, 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 and it just keeps rolling along. So these are kind of decent comparisons, and we'll see, if me doing it, does it even matter? Or would I be better off just eating the expense ratio? But we'll do the math at the end of the year. So here's some of the things that talk about the delta is just a measure of risk of the option that you're writing. So this website, thewheelstrategy.com, they were talking about doing a delta of 50, which they're explaining is like a 50-50 the way a lot of these websites, I know there's more math behind it, but they're explaining like the delta is like the percentage likelihood of it actually hitting. So if you're doing like 2.2, you're at 20% chance of the option actually being exercised. So as you move higher up and it's more likely that it'll strike, then you'll get more premium, but you're taking on more risk. So there's that one. This was one, Theta Gang, ideal delta for the wheel. So these people all said 0.3. So I'm going to be somewhere between 0.1 and 0.5. I've seen various debates about which delta you should take. Some of it's going to depend on how I feel like the market in general is doing, because I'm trying not to get exercise. That's the whole point of this strategy, right? I'm just trying to derive premium. So we will see. So I think that's all I got. How much we got? 15 minutes. We'll see how this does. It's kind of a thought experiment. I don't know if it's going to be worth doing, right? And I should probably track how much time I spend doing this, because that's what also matters. But if I'm retired, theoretically, maybe this is just something that it's just a fun brain, exercise on my brain. Right, you got to do something. Rest in peace, Mr. Portman. I think he maybe took our advice and he stopped doing. He looked like he's a young guy. He looked like he's in his 30s, early 30s or late 20s doing. Oh my God. Like he didn't even understand that he was selling these weekly contracts for people that have not followed it. Like he was selling like weekly contracts, and some of them was degenerate garbage stocks of your life. So he's just rolling the dice. That's all he was doing. He thought that this was like a strategy, but what he was doing was like, let's take this super unprofitable company that is extremely high beta, and I'll do a 1 week, sell a 1 week put on it, and we'll do it almost at the money. So as long as it doesn't go below this price, I'm good. Like he was doing like Spirit Airlines, when Spirit Airlines was like teetering on the brink of bankruptcy, and he was doing option writing on it. Like, and if it went under like $2.50, he got annihilated or something like that. Just nonsense. So I didn't think he would last very long. Yeah, I think we all are hoping to see the Bills get in. I think all of America is hoping for the Bills to pull through. Tariff talk. Wait, tongue tape. Tariff talk that becomes reality will cause guaranteed 20-30% correction within the next year. I was talking to a certain person in Discord about this, but everyone expects that he was going to annihilate China with tariffs. But some of the executive orders, if you look at it, it's kind of interesting. The market's telling you in the China movement, and I know it's yang. Okay, I understand what I'm doing. Calm down. You can go look at just a regular China ETF. But the market's kind of telling you, I think, some of the worries about the China tariffs may be overblown, and maybe he's more focused on Mexico and Canada because he's more focused, number one, on immigration and tax reform rather than China. So the market's kind of telling you that some of the priced in doom and gloom for China is, they're saying it's not so bad. You can make your own. I haven't really. I did make a small buy into yen, I will say, but I think some of it, I think a lot of the doomers are overblown for what Trump's doing for now. I think he's focused pretty solely on tax reform and immigration. When I skimmed through a lot of his executive orders, I think a lot of people, though, Trump just says bombastic shit all the time. And he doesn't care. He just says stuff all the time. And he's like, it's almost a misdirection from what he's really thinking, which I think is really cool. Like, I don't know how to describe it, but I'm from New York. He's like a New York guy. And I do the same thing sometimes. Sometimes I'll just throw people off and say kind of just stupid shit. And I'm just kind of, you can deal with me saying that while I'm actually thinking of another thing behind the scenes. I think Trump is kind of that type of guy. So like the media gets so obsessed with some of the things he says. I'm like, you're missing, like, sometimes he just says nonsense for a reason, I think. Charge $50 an hour. Oh my goodness. Oh, you're talking about like how much my time costs. Oh Jesus. Okay. Big misdirections. Yeah. Like, I think people, like, I think they wanted you to see, like, them do like ICE raids, put people in handcuffs and ship them on military planes south. Some of the stuff he talked about Davos, but behind the scenes, like I think they're working on what they really are after. Like the tax reform. I think that's what they're really after. And immigration reform against Canada and Mexico. So it'd be interesting. I think Trudeau is wholly unqualified. Canada needs to get rid of Trudeau because Trump's going to eat him for freaking breakfast. He's not ready for that fight. We will see. I will be interested to see how this option stuff works. So I will make my next contract buy on Monday. So I'm going to look at QQQ and we'll see what I'm going to buy or sell. I'm selling put still because I didn't get assigned. And then I'll keep track of what income we receive from the wheel. I'll be interested to see what kind of yield. If I had to guess right now, I think I'm going to derive somewhere in a 7-8% yield for the year. So we'll see how it stacks up. I mean, if I get wrecked on one of these contracts, then I'm going to have to sell more. I'm going to have to replenish that funding, right? So I'm not going to have and that's the other thing I want to show is like, there's no way you can my theory right now. I don't think you can consistently use this to get guaranteed, like, let's say guaranteed biweekly or monthly income from this. if you want to keep replenishing the fund and not losing, the value of your portfolio. And we've talked about this with what some of these ETFs do. They always pay you premium, even if the fund doesn't generate, right? Even if they lose on their contract writing, they still pay you in a dividend. And that's why they're eroding. We've seen it with all of them. I mean, it doesn't matter what the stock is. Any upward movement's temporary. This is the doom of all these funds. So I'd be interested to see if I if I get wrecked on one of these contracts, right? And then it takes me how long does it take to replenish up back to the 200,000 where I can actually start taking the premium back and putting it in my bank account and spending it, right, to live on. So then that would kind of prove how idiotic yield max is. The fact that you can't rely on these strategies to derive constant guaranteed income, which is my theory at this point. I think the only way you guarantee, something like DLN is guaranteed. It's just qualified dividends from 500 or from 300 something companies in America, right? And they just DLN, you just get the dividends, get paid that month. And you can see in their dividends, they vary each month because it depends on what companies are paying. It's just giving you whatever pays that month. And there's a certain 4-month cycle that a lot of the bigger companies are on. So you can see that those are the months you get more. So we'll see. So everyone, any last thoughts? I'll do a full episode next week. But other than that, I'm excited about the prospects of, you've heard what I've been talking about recently. I've been very interested in Micron, Boeing. I'm still interested in Uber. I'm very, very happy about the upward movement of the home builders and master brands. I think it's up 25% this year. If any of you I kind of was telling people, I'm when master brands dropped into the 14s, I think I've said this the whole time. That was my buy point for anybody. If it dropped, because I bought it in the 14s and it went all the way up to 19 and then back. And I'm if you wanted to get into it, at 14 was the right price. That was the base valuation of that type of a company. So Starlink, I do not know what that is. But anyways, Trump looks like he's going to boot Elon soon. I think Elon made a big mistake. Elon dunking on Trump's announcement the day he made it with that group. What was it called? The $500 billion fund he's going to do with Oracle and Sam Altman. And then Elon's immediately, I don't think it was even an hour later, he starts dunking on it. I'm Trump is, this is the one thing you don't do to Trump is you don't mock his announcements like that. So, this might end. I kind of thought it might go till 4th of July. This relationship might be over now. You don't know, but for God's sakes. Dan, we're neck and neck in stock picking contest. Oh, are we? I haven't checked it. I might, just the timing of it being the way it was, I thought, ooh, Master Brands is at 14-ish. It's going to do well this year. If housing gets back to normal type of valuations, I like my choice. New home builders is just not my I don't particularly think new home builders is the way to invest in real estate, because you're missing whole pieces of real estate, like wholesaling businesses and refabs. And the new home builders then take on political risks. You have to get building permits into new areas, and people don't want new homes. Once you get your home, you're now you're a voting member of that community. You kind of just don't want anyone else to move in. You don't want the roads to be congested. So I'd rather get all facets. So I think real estate might see a good resurgence. I think it's definitely worth the risk at this point. But it's already pumped a bit, so we will see. DoD budget's coming. I'm going to be really excited to see Pete Hegseth's DoD budget. I think military companies are interesting right now. He talks about war fighting as his priority. So we'll see if his budget matches what he's talking about. Where's the money going? Is it going towards war fighting capabilities like ships and tanks and stuff? Or cybersecurity budget, where is it going? What's his opinion on space? Like, is space, how important is the space part of the defense budget to Pete Hegseth? So I don't know yet. We will see. I am fluid. What do you think about General Dynamics? I owned General Dynamics for a long time, like like 7-8 years. It's just they have like they're in everything, so they have something you'd like they have like they're the one of the two companies building the submarines, which I really like. They also do all the ground assets, so they're doing, potentially you're doing the Bradley's replacement, the Booker, and then you could potentially be doing the replacement for the Abrams. But my only concern is that the military budget devoted to land forces like Army, Marines, it's not growing. Like the money for the defense budget, you see where it's going. It's going to space, it's going to armaments, it's going to naval, it's going to things that compete with China. And the Army's budget is just not increasing. So if we just go by that, like, we're not increasing the amount of tanks in America. We're probably decreasing. It's not my favorite military company anymore. It just isn't. It's a safe one. Like, it's a very consistent performer. It's just not for me. Okay. Game is about to start, so have a good day watching. Hopefully if you like football. Hopefully, I'm hoping, Bills Commanders, man, that would be really fun. So we'll see. All right, so everyone have a good football Sunday, and we will see you later.